The war of words heated up, and stocks and bonds cooled off again today, with today's losses driven by the political freeze-up in Washington over the debt limit and the government shutdown. The Dow has now shed all of September's gains. It's down a staggering 900 points from the all-time closing high hit just 3 weeks ago. That's nearly 6%. And today was the worst day in 6 weeks for the S&P 500 and NASDAQ. That market fell 2%, and volatility spiked to its highest level since June, all because there's seemingly no movement and no discussion between President Obama and House Speaker Boehner over the reopening of the government and averting a federal default in 9 days' time. Here's how the president characterized the stakes during an hour-long appearance in the White House press room this afternoon.
A decision to actually go through with it, to actually permit default, according to many CEOs and economists, would be, and I'm quoting here, insane, catastrophic, chaos. These are some of the more polite words. Warren Buffett likened default to a nuclear bomb, a weapon too horrible to use. It would disrupt markets. It would undermine the world's confidence in America as the bedrock of the global economy.
Later, House Speaker John Boehner had this to say in response.
There's going to be a negotiation here. We can't raise the debt ceiling without doing something about what's driving us to borrow more money and to live beyond our means. The idea that we should continue to spend money that we don't have and give the bill to our kids and our grandkids would be wrong.
On Wall Street, some of the biggest gainers so far this year, technology, biotech stocks, became the biggest losers today as traders cashed out and took what profits they could. Here are the numbers if you care to look. The Dow tumbling nearly 160 points, the NASDAQ down 75, making for that 2% drop, and the S&P 500 fell 20 points. Bond prices fell too, and an auction of short-term Treasury bills produced the highest yield since 2008.
Well, the partial government shutdown is bad enough, but a U.S. default, if that happens, would have catastrophic consequences on the global economy. So says the chief economist of the International Monetary Fund. Although he calls a default unlikely, the IMF says a failure to repay the nation's debt would be, quote, felt right away, leading to potentially major disruptions in financial markets, both in the United States and abroad, end quote.
The U.S.'s second largest creditor also weighing in on Washington's budget and debt limit impasse. Japan's finance minister is pushing U.S. leaders to resolve the deadlock. He says another fiscal crisis would wreak havoc on Japan's finances because of its trillions of dollars worth of investments in U.S. Treasury bonds. And late today, we received reports that Treasury Secretary Liu held a conference call with the Financial Stability Oversight Council about what would happen if the debt limit is not raised. The chairs of the CFTC and the SEC discussed the impact of the lapse in funding on their ability to monitor and respond to potential market events. Further details of the call are not known at this time.
And small business owners feeling less optimistic these days. The survey taken in September shows that they're worried about the economy, even though their outlook for sales and capital spending actually increased. The National Federation of Independent Business says it's possible that the government shutdown, which started just after this latest survey was taken, weighed heavily on those business owners.
Well, with the government shutdown now in its second week and the nation hurtling toward its debt limit, exactly how close is Uncle Sam from running out of money? How much more money does the Treasury need to borrow? And what do the bills really look like and when do they hit? Eamon Javers takes a look.
Treasury Secretary Jack Lew has said that after October 17th, the U.S. government will only have $30 billion in the coffers and soon be unable to pay its bills. But how soon will the United States miss its payments? It's not totally clear, since daily inflows to the Treasury are difficult to predict. What's not difficult to predict, however, are the outlays. After October 17th, the major payments come due quickly for the United States government. On October 23rd, the U.S. owes $12 billion in Social Security benefits. On October 31st, the Treasury must pay $6 billion in Treasury security interest. But it's November 1st that could be the highest hurdle of all. On that day, the U.S. must pay $67 billion on a variety of expenditures: Social Security benefits, Medicare plans, active duty military pay, retiree and veterans payments, and supplemental security income. That's the date to watch if you're worried about the U.S. missing a payment. It doesn't get easier after that. On November 13th, Treasury must pay $12 billion in Social Security benefits. And on November 15th, it must pay $30 billion in Treasury security quarterly interest. Bottom line, it's impossible to say when the United States would miss its first payment, but every day after the 17th, it's going to get tougher and tougher to pay the bills. For Nightly Business Report, I'm Eamon Javers in Washington.